Hey everyone, welcome back to my channel. Today I wanted to touch up on recession layoffs. There seems to be very obvious layoffs happening, but a lot of people are not taking these obvious signals or signs. There's two sides of what people believe is going to happen on Q3, Q4, and then thereby affecting 2023. Q1 and Q2. You know, the yield inversion talk is widespread of 2023, maybe Q2-ish, where things don't look good at all, where there might be a global financial crisis like event, which I think is it's totally probable. When you look at the layoffs, obviously with tech, there's quite a lot. You know, it doesn't matter if it's Meta, Microsoft, things happening with Nvidia. Even if you look at different sectors in retail like Target, Walmart, you know, what happened if we were not going into recession, but we were going to have a bounce back? Why would the big box stores start to cut if there was going to be such a bounce back that would need people to run these stores? Even when you look at, let's say, real estate or home building throughout the country, it's dropped. If you look at the housing inventories, the inventories are starting to rise, but the home contracts and building dropped. The sales are dropping, right? So this doesn't seem the economy is expanding where they feel that they can buy a house, right? When you look at the real estate, when you look at the layoffs in a lot of the companies, it sort of should send a signal. If the economy was going to do so well, you would at minimum maybe keep the people that you have because you don't want to pay the cost of rehiring and retraining. And that's why you should see people hold, but you're not seeing that. What you're seeing is layoffs. They are preparing for more of a downturn, which is why their outlook in the future is less everything, less sales, less business. If there's less sales and less business, they have to cut down the cost of what their business is doing, right? What their company is spending. And so there's other costs of spending that goes, you know, let's say things like ad, but the human part is, you know, can be costly. But if those human jobs are being laid off a lot, it should give you a sort of an insight what these companies are thinking. And so what happens is that they would front run the layoffs beforehand and try and brace for the impact of whatever is coming through. And then if need be, it's after the economy starts doing well that they would, I think, start taking a risk for hiring. You know, I think maybe a lot of the times that in the past, maybe the companies would hire in anticipation maybe. I think this time is not. I think after the pandemic, there will be most, if not all, companies will wait for assured expansion of the economy rather than anticipating. And another thing that I do is actually I walk around shopping centers and business districts. And what you can do is actually check out the different stores that are there, whether it be retail or let's say family offices for, like, you know, tax or whatever, and see what's going on. But basically, during that time when people thought that the Fed was not going to be hiking and whatnot, or the Fed is going to turn around and pivot, I had come back to where I am right now after a long time, and I noticed a lot of different changes. But from when I came back, I started walking around the business areas and very boutique stores, and these are very expensive stores. You know, every day I would walk around just to get a feel and see what's going on. What had happened is slowly but surely the stores would close, and so this is at the time when you heard the media was talking about it's going to be great, it's going to be all right. You know, you had a lot of professionals saying that the Fed was going to pivot and they had no choice, that they were backed up into a corner and all of that stuff. But, you know, fast forward another 6 months, we are breaking into the fall. That wasn't the case, right? None of that actually happened. And what I noticed was that different stores were closing, and the ones that were open, it seemed that the business hours or the office hours, you know, kept getting shut down, right? I would be walking around on a Monday and the stores would be closed, right? I'll be walking on a Tuesday, the stores will be closed, right? Or the offices will be closed. So things like that is maybe good for you to do. I think that there's people that used to describe this where an economic event might be happening, and they say, oh, the tide is right before a hurricane or storm. The sea tide would slowly be going out, right? It would slowly be going out to slam down. And so when you look at that's the good way to gauge whether it be retail stores or family offices, that you would see them slowly close or slowly lower their business hours, and then what would happen is a big slam down of what we are expecting at 2023, maybe especially Q2. You know, you want to be aware of that and be prepared for such things like that depending on your situation. And so we touched up on recession layoffs and what I think, and a lot of those things are happening. Now, what's interesting is the markets are obviously they're pricing in some sort of a pivot. If you look at the markets, they actually turned around. Whether this is a pullback or another leg higher or another reach higher, I'm not quite sure. This thing hit the ceiling on the trend line, the major trend line, and I'll go back and check out some of the charts and see if I'm looking at a pullback or another gigantic leg down. But the thing is, we'll have to wait and see. If it's a gigantic leg down, it's going to be, sort of super, we're going to know. But if this is a pullback, when it comes down, the big question is, when we're looking at the markets, people are wondering if this is going to be another leg lower or a bounce. If it doesn't go past the lows in June, the way I'm seeing it is maybe the stock markets are pricing in the bottom, which is weird. I'm not quite sure what to make of it. That the stock market is putting in the bottom, which would then mean that it's going to possibly making a higher high. We don't know, so we're going to have to watch that and see. But basically, the timing of how this happens, it can be more extended than people think, and so it can distort what people are seeing. So basically, let's say markets, are bouncing back. They can be bouncing back because they see a good Q3 and Q4, but that doesn't mean that the markets, let's say, makes its way back up and can stay there, or is staying suspended in the air, right? Unless there's a central bank balance sheet expansion. To me, if the markets make their way back up, I'm always going to be cautious and skeptical until there's that kind of backing, right? I think what this means is that you can have the markets make their ways towards the highs during this fall and winter, but even if the markets are going upwards towards highs, that can mean two different things. One is the economy is doing great, and that's why the markets are going up, and that brings us to number two, which is the markets are pricing in that it's going to get bad. That's why the Fed is going to be forced to pivot. The way I'm seeing this is people are pricing in that the Fed is going to be forced to pivot because they don't control the forces around them, which is for sure makes sense. Whether these markets go up or go down, I'm not quite certain if right now Bitcoin and crypto would follow it exactly. So it's possible that, like I said, it makes another leg higher, but it doesn't seem there's a lot of strength, the sort of strength that you want to see aside from the run-up that we saw. I don't know, that could be considered strong, but with all the stuff that is going around us, that to me is, for me, it's not strong enough. And what I am expecting is that we're going to be testing the June lows. Depending on what happens, maybe we might break through that. And if we break through that, like I said, we don't know where that next bottom is. For me personally, I would prefer a notable downturn, then you'll get a better idea, or a notable event happening. If we put in a higher low, that's okay if we don't go past the June lows, but I prefer something like, the war's over, guys, we signed a deal, no war's happening, something like that. The thing is, we actually don't know what's going to happen, right? And that leads to geopolitical part of this, which is can really change the previous points that we just made right now, right? And so the Federal Reserve can come out and say they're going to do this, they're going to do that. They have a plan for this, they have a plan for that. But if something happens on the geopolitical side, then everything's out the window. During this fall is where a lot of these switches and changes might happen, if it's going to happen. I think the Germans they're fed up. I think the Germans are, whether the Germans stay an ally of the US in the future is questionable. I'm not quite sure if I see that. There's a lot of people, professionals, that say, no, that's not true. One thing about professionals, everyone, you guys, I believe that because they were professionals, they've been doing it for 10, 20 years, or they're much older than you, so they'll have insights or whatnot. That's not always the case. I've learned that the hard way, and kind of, even though there's that professional there, you just want to make sure that you're at the end, whether it's making decisions or putting a thought process together. As for Europe this winter, I think that should force some concessions with the US, and let's see how it goes, because the fighting should slow down. But the preparation for the next, is this Ukraine war, a really big major war, or is this, just the beginning, a small battle for another gigantic round two? The uncertainty of this war continuing on and it getting bigger, it's too extreme of a situation that can be probable. If this fall we don't see these leaders hurry up and making some sort of deals, coming to the table and hurry up and, let's say, ending the war, if that war doesn't end and it goes past this winter, that's something you have to be prepared for. When you look at these recessions happening, these layoffs, these companies are keeping that in mind. They're keeping a lot of things in mind, but this war thing is really bigger than most people think. Depending on what certain industries, especially in manufacturing, let's say a Boeing and whatnot, they're going to be privy to information, about this war and how it might affect them, because jobs that cost like who knows how many thousands, those companies will, should be getting heads up and whatnot of the situation beyond far ahead of anyone outside of those sorts of companies. And so keep that in mind when some of these companies are making decisions on layoffs and cutbacks. And so that's it for this video, guys. I hope you guys liked it. If you guys have any information, especially about that war, war. Let me know if you guys think very differently, especially about that Germany and US alliance in the future. Let me know about that, because that's what I'm seeing, and I'm really, because that's a game changer, I think. And on top of that, I am gonna be putting up videos in the future about an overview of what I think, aside from, let's say, the markets and crypto, but geopolitically, of what I think can happen, and try to put that in a cohesive thought. The geopolitical part especially is going to be a lot of game changers, and so please keep that in mind, and I guess I'll see you guys next time.